Welcome back, guys. In today's video, I'm going to teach you a day trading strategy that has 70% win rate. This strategy is very simple to trade. If you're a full-time worker, if you are a busy worker, you work in a factory, you work as a security man, you work as a nurse, a doctor, as a lawyer, or anybody who just wants to trade can just trade this strategy. All you need is the patience to look at the chart and wait for the setup to be ready. It's very simple but very profitable. It has 70% win rate if you are able to trade it well. So without wasting my time, let's get started. This strategy I'm going to teach you is called Trending Morningstar strategy. Let me explain something to you. You know that in candlestick formation, we have a bear candle, right? We have a bear candle, which is a full body bear candle. And then we have a bull candle, a full body bull candle, right? We know that bull candle represents what? Upwards movement. And bear candles represent downwards movement. But there are also some candles that looks like this. They are neither bull, neither bear. They are this way. Can you see? They look like this. These type of candles, we call them doji candles. I bet you all know it, right? We call them doji candles. So they are neither bull candles, they are neither bear candles, irrespective of the color, because some of them might also have this color, green, but still doji. Okay? They might have this color. So they are neither bull or they are neither bear candles. Doji means indecision, which means that the market has not made a decision to move either up or down, because bearish movement means that the market is going down. Bullish movement means the market is going up. But when you get a doji candles, the market is not moving up, neither is it moving down. These are called doji candles. So this is what you're going to use to determine our trade entry in the strategy I'm going to teach you. So you can see that when you see these three things, 1, 2, 3 with doji candles, we call it a morning star. So first one, bear candle. It can be full body or with some wicks. Second one, then we have a bull candle. Now, in between this bear and this bull candle, you can find a very nice doji candle in the middle. When you get these three candlestick patterns, it's called the morning star pattern. But we only trade the morning star in the direction of the trend. That's why the strategy is called trending morning star. We trade morning star in the direction of the trend, only in the direction of the trend, not anywhere. Okay, because candlestick patterns, they are very important per their location, where they are formed. That is what made them important, not anywhere. So we only use these ones in the direction of the trend. We only use this one to trade in the direction of the trend. That's what's called trending morning star trading strategy. So we know that markets move this way, up, retrace, and up. Now, along this uptrend, you can find these candlestick patterns along this uptrend, which means that they can either happen here, there, or on the next retracement. Or sometimes market also moves like this. So you can see that there are deeper corrections and there are shallow corrections. Anywhere you find this kind of patterns along the trend, you realize that anywhere it can form here, it can form there, it can form there, it can form there. So fast you find a pattern along the trend, along the original trend, the pattern is valid for you to take the trade. Okay, the pattern is valid when you find it along the direction of the trend. So if the market is moving upwards, you must always do what? You must find the pattern in direction of the trend. So this is what you see. You will see that on an uptrend, the market will move like this, and whilst it's retracing to a support zone like a trend line or moving average, you realize that it will give first a red candle, which is the bear candle, right? Bear candle, B-E-A-R, bear candle. Then it will give a doji, which means indecision, because don't forget the market is correcting. Here is correction, right? Here's a correction. So the next correction down, it will give a bear candle, because all these ones will be bear candles. Okay, but we don't need them. Just focus on this one. Then it will give a doji. Doji means indecision. Either the market should continue downwards or should reverse upwards. It is indecision at that particular moment. So when you see a doji candle, it means the market is either breaking the trend or want to continue. So the moment you see the bull candle appear after the indecision candle, it shows that the market is ready to hit and reverse. So you have to enter here, your stop loss below the pattern, take profit target 1:2, and then when the market moves in your direction, you take your profits and you are out of the market. Very, very simple. Let me recap again. On an uptrend, you can see power move, retrace, power move, retrace. So we are waiting for a way to enter the market. You want a way to enter the trend. So you either wait for the market to hit the trending line or a moving average, any support area or Fibonacci, and then you enter. Or when you see these patterns along the trend, so you can see it here. First, what do you see? You see a big red candle, or if not a big red candle, just any red candle which has full body. So full body candle. The next one, you see a doji candle, which is neither bull, neither bear. Now, the next candle determines either the market is going to continue upwards or to break the pattern and reverse the trend. So we are waiting. So you keep waiting till you see the next green candle. The next green candle gives you a confirmation. So this is called trending morning star trading strategy. Trending morning star strategy. So you enter where I said you enter here, stop loss below the pattern, take profit 1:2. Very, very simple strategy to trade for anybody. So when can you trade this strategy? You can trade this strategy on H1 and M15 and H4. But if you're a full-time worker, then looking at it on M15 might be a little quick. So if you're a full-time worker, then you can trade it on H1 and maybe H4. But H4 is for swing traders. I don't advise you go there, okay? Just trade H1 is the best. Search for a forex pair that has this particular pattern. So you know that you trade your currency meter, right? So you open all your charts, about 4 charts with the currency meter. You check the one which is trending and the one which is not trending. You merge them together, okay? You merge it together, then you open this on your chart. When you open it on your chart, now you wait for a currency pair that has this pattern forming in direction of the trend. Then now you take the trade. If you don't see these patterns forming in the direction of the trend, this strategy is not valid unless you are trading a different strategy. But this strategy is called trending morning star pattern, which means that you must only see the morning star before you take a trade. If you don't see the morning star, you don't take any trade unless you're taking different strategy. That one is your own choice. But this particular strategy I'm teaching you, it works every time. If you find it, most of the time you can get about 70% win rate. Let me show you an example on the chart. So on the chart, how do we identify a trending market? Using a trend line or moving averages, right? For it to be very easy for you, you can use moving averages or you can use a trend line. So let's assume that we are using a trend line. Assuming we are using a trend line. So we see that the market is making power move to the upside. So the market is trending, right? Let's see, can we find these patterns along the trend? First, let's find it. So we can see that, let's see. Good. I can see one here right now. See, one is here. Have you seen? Can you see, guys? One is here. 1, 2, 3. But at this point, you cannot take the trade because now that the trend is beginning, you wouldn't know whether the trend is still, this old trend is still continuing down. You wouldn't know. So though the trend is, it shows the trend is trying to reverse up, but you can't take the trade. This one is upside down. Don't do that. So let's go inside the trend and let's see. Can you find some along? Can you find some along? Yes, 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 along the trend. Along the trend, can you find some? Good, we have one here. Can you see, guys? Can you see? This is also a different variation, but the same structure. Look at 1, 2, 3 in the direction of the trend. So assuming you are supposed to enter here, assuming you saw this pattern you want to buy, you have to put your buy order here, your stop loss below the pattern, and you take profit somewhere there. So you take profit somewhere here. Assuming you did that, that's what you would have done. Let's go on to see if you can find some along the pattern, along the charts. Can you find some again? No, you can't find some. Good. But there's one more here. See, look at something. There is one more here. This is also a different variation of the pattern. This one, it has two doji candles. Can you see? So where will you buy? You enter after the bull candle closes. Your stop loss behind the pattern. You take profits 1 to 2. You're out of the market, or 1 to 1.5. However you want to take it, then you're out of the market. So this one would have taken you out. This candle would have taken you out because 1 to 2. Let's see. Let me measure. Here is what? 25 pips, 26, 25 pips. Let's see if you reach 50 pips. 50 pips, yes, more than 50. 50 pips would have been here, somewhere here. So we would have been out. The market could have hit our take profit target. So you can find these patterns along trending markets, okay? Along trending market. Let me see if you can find some again along the trend. Can you find some, guys? Can you find? Good. One is here. See, look at it. Look at this one. This one you don't find doji, right? Good. It's here. One is here. Look at this one. Look at the variation. Can you see the variation? Guys, are you watching? Can you see the variation? 1, 2, 3. Have you seen? So you enter here. Your stop loss below the pattern. Take profit target 1 to 2. And then you're out of the market. Can you see? So this is very easy strategy to trade, but they come in different variations. Let me go back to the board and explain the variations to you. All the different variations you can see when you're trading this particular pattern. It's very easy to trade. It has high probability if you're taking it 1 to 2 or 1 to 1.5. It has a very high probability. Even if you're taking it from for 2.5, 1 to 2, 2.5, you can get about 50% win rate. If you're taking 2.5, if you're taking 1 to 2, you can get about 60% win rate. If you're taking 1 to 1.5, you can get about 70% win rate because it works most of the time. This strategy works most of the time. You just have to be patient for these candles to form on the chart before you take the trade. That's what you have to do. Just patient. That's all what you need. Patient, patient, patient. Even from what you saw, I don't even need to explain to you again, right? The patterns are formed, but they comes in different variations. So with this, I don't even need to explain to you again because you can see different variations on the chart, right? You can see different variations. What you have to do is that you go to your charts and you search for these 3 patterns. Search for the different variations you can find. Because if you don't practice, you might not be able to spot it because it's now formed. You're not experienced with it. So you must go to your chart. Go to your chart, back test your chart, okay? Go back to your chart and find all the trending environment and see if you can spot some of these patterns. 3 candlestick patterns. One down, the next one doji or some initiation candle, or maybe you can have a long tail, and then the next one a bullish candle. So red, long tail, or doji, and then bullish candle. Then when the bullish candle ends, you have to hit your buy, or you put your stop, your buy order there, and you take the trade. So you have to go to your chart and search for all this. Look at one is here, guys. One is here. These patterns are everywhere, guys. You see them every time in direction of the trend, not against the trend. When you see the pattern forming upside down, then don't take the trade because it's upside down. It's going against it, but this one is in the direction of the trend. The V shape should be in the direction of the trend, not upside down. Okay, so one is here. Can you see? It happens most of the time. Most of the time. Can you see another example? Here it was about to happen, but you couldn't see. Look at this one. This is a very big one, but it's too big. You can't take this one, guys. You can't take this one because it's too big, right? It's too big. If you are taking, then you should have waited for a discount. You can't just enter here. Can you enter here? Though it would have been a winning trade, but you cannot enter there because it's too high. If you enter here, where will be your stop loss, guys? Here. All the way there. You can't do that. Okay, you can't do that. So you can't do that. You have to enter somewhere. You have to wait for the market to come down. Your stop loss will be somewhere reasonable. Okay, so as you saw this pattern and you want to take it, you have to wait for the market to come down a little. Then now you enter and then you take a trade. If not, just leave it. Okay, leave it. If it's too far, just leave it. This pattern is having most of the time along the trend. You can look at one is also here, guys. Let me clean this. Let me clean the lines. One is also here. Can you see? It happens most of the time along the trend. Go back to your chart, test it, just go through, and you can spot most of them. Okay, you find most of them and keep all the different variations in your mind. Just take another part. They look like V, one full one, second one green, the middle one should be doji or with a long tail. That's all. Find this sample of trees and then you enter at the right time in the direction of the trend and you become a profitable trader. So that's all for this video. If you like the video so far, don't forget to hit the like button and subscribe to my channel. Guys, you're not subscribing. I put nice videos here. I spend my time to put nice videos here. I don't know why you guys don't like nice videos. I don't know. Guys, subscribe to the channel, okay? And help me to grow the channel. The channel numbers are very small. Just subscribe and hit the like button just to help me grow the channel so that anybody who's also out there will get the knowledge you're also getting, okay? To get the knowledge you are also getting for free, just hit the like button and subscribe to my channel. This is was your mentor. See you next time.